The US stock market staged a sharp rebound this week. But the big question is this a start of a new rally or just a temporary relief before another fall? Let us break down the numbers, sentiment, and the charts. Last week, we discussed how S&P 500 and Nasdaq 100 were trading at a critical support area demand zones with a strong technical confluence. The bounce that we were expecting has played out very well. Here is the scoreboard. S&P 500 up by 2.92%, Nasdaq 100 up by 3.45%, Dow Jones gained 3%, and Russell 2000 rose 3.22%. Europe and Asia also joined the rally. DAX up by 3.8%, Nikkei up by 3.15%, and even Hang Seng Index also bounced 2.38%. Global risk sentiment has clearly improved. Market sentiment is still cautious, but certainly improving. Fear and greed index for S&P 500 rose from 35 to 43. Is still in the fear zone, but better than the last week. Put-call ratio 5-day average stands at 0.78, suggesting traders are still somewhat defensive. The VIX has dropped below its 20-day moving average, a good sign that the volatility is cooling down. Looks like Wall Street took a deep breath after weeks of panic. Maybe traders finally stopped checking daily portfolio every 10 minutes. Or maybe, or just maybe, the worst is behind us. But don't get too comfortable. The charts still have the final word. The US job report has added optimism. Payrolls increased by 177,000 in April, beating expectations of 133,000, although slightly lower than the March figure of 185,000. Unemployment stayed steady at 4.2%, so the labor market remains resilient. In Europe, inflation remained unchanged at 2.2%, giving more room for ECB to cut rates. Meanwhile, India's manufacturing PMI stood out globally, rising to 58.2, while most of other economies saw a dip. Technically, S&P 500 is showing a strong intent to reclaim SMA 125, the key momentum indicator. Nasdaq 100 looks stronger in comparison. Let us now jump into the charts and decode the next possible move. This is the weekly price chart of S&P 500 index. The index finally closed in the last week at 5686.67, and hence it was bullish by 2.92%. But look at the price action. First, for 2 years it formed a rounding bottom pattern, and there was a breakout in January 2024. Now, if you see the broader picture based on this chart pattern, the target could be phenomenally higher from here. If we measure the height of this rounding bottom pattern and project it, what it has done, it achieved the first target of 61.8% expansion level. Then price consolidated and this correction took place. So nothing alarming. Such price action is always very normal. Whenever the price attains the target, price gets overextended and the correction starts. Now, if the trend is resuming now, the next potential target on long term would be 6,600, which is nothing but the 100% expansion with respect to the rounding bottom pattern over here. Now, this bounce is very significant, which we have already discussed earlier also. Price has taken support here, price has taken support here, price has taken support here. So, this had a 3 touch points. So, this trend line was established trend line where the price took support once again. If at the same time it was a confluence of the neckline of rounding bottom pattern from where it bounced. The third confluence was SMA 144, and hence the probability of S&P 500 bouncing from here was higher than going down. What is more important to note is the price is currently trading above EMA 55 and almost kissing EMA 21. But if you do the retracement analysis of the corrective wave recently, the most important aspect is it has already given a breakout of the golden ratio, that is 61.8% retracement level, which was falling at 5,630 level. So this is a very significant move because the two event has taken place in the last week. One, the breakout of the golden ratio, again a breakout of the EMA 55 on weekly chart. So next potential resistance would be this particular area where the price gapped down and then it moved up, and this area is also falling at the confluence of 78.6% retracement level with respect to the corrective wave. So 5782 to 5827 is the next immediate resistance area. Where could be the potential support? So one area of support is this based on the price action, which also coincides with something around 50% retracement level at 5400, and then there is an existence of a gap at 5309, which we can see on the daily price chart. Here is the daily price chart. We can see the gap over here, which is existing. Ultimately 5300 becomes the strong support in S&P 500. So overall structure is bullish. Now the market structure has turned higher highs and higher lows kind of market structure. In daily time frame, we can see the price is trading above EMA 21 and EMA 55. The only worrying point is that EMA 21 has yet to cross over EMA 55. And this zone where we had discussed the immediate supply area has multiple confluence of SMA 233, SMA 200 and SMA 144. So this is likely to be the resistance area. One possibility is in the recent time it was in a downtrend, so we need to have some kind of reversal chart pattern. This could be potentially the left shoulder. This is head in place. Possibly the price may go to the supply area, then correct and form something like right shoulder and give a breakout of this neckline to potentially declare that yes, S&P 500 is back in the markup phase. So this is the price chart of Nasdaq 100 in weekly time frame. Last week it closed at 20,102.61. Here too we can see the rounding bottom pattern. Here was the breakout, and if you project the target based on this rounding bottom pattern, it attained the first target of 61.8% expansion level. So the price action is quite rhythmic. Now correction is halted at the neckline, which had the confluence of SMA 144. So the next potential target is likely to be 100% expansion with respect to rounding bottom pattern that calculates to 26,200 level. Here too, if you do the retracement analysis of the corrective wave, the price has given a breakout of the golden ratio, that is 61.8% retracement level, and currently Nasdaq 100 not only trades above EMA 55 but has closed above EMA 21, which is a pretty strong price action. Now look at the daily price chart. Here too we have a gap, so this area is a very good support. However, there is an intervening support at EMA 21 and a zone between EMA 21 and EMA 55 that comes around 19,000 to 19,400. Now we have marked the resistance area at 20,600 because there is an intervention of SMA 144, and see the price action. This was earlier acting as a support, and here it acted as a resistance and then support. So 20,600 is the immediate resistance, which implies once the price takes out 20,600, it will pave the way for the level of 21,600. As always, let the charts guide you, not just the headlines. If you want a smarter stock picks backed by artificial intelligence, check out the Pro AI tool by investing.com. The link is given in the description box below. And yes, my subscribers get an exclusive discount. See you in the next video, and don't forget to subscribe for more insights.